Welcome back guys, CryptoFollow channel. Today we'd like to talk about one of the key concepts in trading, compression. What is it, how you can identify it, and most important, how you can use it to make a profit. Stick around until the end to discover all the secrets. First of all, compression is a market condition where the price begins to narrow into a really tiny range, or some tiny uptrend move, or in some tiny downtrend move. Market makers build their liquidity. If you look at the chart, you will see the series of lower highs and the higher lows. It's like a spring coaling tire and tire, preparing for the sharp movement either upward or downward. The main question why compression is happening. It occurs due to the balance between the buyers and the sellers. Everyone is waiting for the moment when the direction becomes clear. That is breakout. So think of the price at the compressed spring that's about to explode in a specific direction. What direction? Unfortunately, at that moment, we just work with possibilities and they can't know which one direction will be for sure. Here's a few examples of compression. In the simple words, in a simple example, it's just a basic trend line. For example, this is a BTC on a Bybit 4-hour time frame. I use the reply bar to show you just example. So here, what the majority of traders do in this way. First of all, you have to work in a complex. And if we form something like this one, so we grab liquidity, bounce, and start build a compression. Take a look. Touch, 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 touch. Every single touch is somebody open that long position. This also can be identified like a channel. We can go in higher or we can drop below under this compression. And we can't know in a moment when will be the last touch and we drop it down, for example, because the traders who open the long position on this touch of support, they also open at long position like this, add stop loss under the last low, for example, 0.75%, and wait the continuation on 4-hour time frame. And then we drop it down. So their position liquidated. It was just a compression on 4-hour time frame. Take a look. If we build the compression on 4-hour time frame and we breaking out down, the people start open short position. But if we zoom out, for example, on 12-hour time frame, compression where we build here, 1, 2, 3, 4, this line. So all of that highs till even this one closed. After that, some traders start form another pattern like head and shoulder, and the size of that pattern should be around here. So it's totally another story. So I recommend you go and check a free video about a head and shoulder. So this is one way about a compression on different time frame. Also, compression can be like a range. And when we build the range, you can use the ATR indicator. It's a average true range. When you see, for example, when we trade and you see the volatile going down, it means sooner or later, we will see the breakout. Here, we go in higher, form almost deviation at the top with again low ATR. And boom. Volatility going higher, average true range going higher, we're breaking out of this range. It's just on the daily time frame. One day we'll just realize everything what we saw on the BTC, it was just one global range compression on the monthly time frame. So take a look, the great example of compression on BTC on 1-hour time frame in December 2022. So we use the Bollinger Bands, December 23, 4 p.m. The price is 16K766. Got it? Next 2 days till December 25, 4 p.m. we trade in the range 0.58%, so less than 1%. It was like $100 range for BTC compression. So it means sooner or later we will out of this range. Here's some tips about a compression. First of all, you can identify the K levels. K levels in this case was the test and the close 50% of 1 hour gap. We got an impulse, come back. So this is a K level. And after that K level, we build a compression. So mark that support, this like support level, and resistance. Resistance was this top. Next step is wait for the breakout. The confirmation of the breakout, this could be the strong candle with a high volume. In this case, we have to use the volume indicator, and we can identify here we sweep liquidity, and on this candle, we can open long position, for example. Of course, all the time you have to use the stop losses, right? And trade with a trend and watch the volume. But you have to understand, if we trade in the trend, mostly we will continue the trend direction. But if we trade a long time period in the range, most likely we will see not a continuation, we just will see the sweep of liquidity, like it was here on this example. Don't enter a trade before the breakout. Compression can be last longer than expected. So yes, for example, like here, so compression on 1 hour time frame is good, but if we zoom out, it's just compression on maybe 4 hour time frame or on a daily time frame. Next tip, it's don't ignore fake outs. Sometimes the breakout can be deceptive. Look for confirmation. With impulse, we go in higher, because everything should be in complex. And of course, don't risk your entire capital on a one trade. Always stick to risk management rules. So guys, this is just a few words about compression. I hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.